Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. With us today, a brand new guest, a guy I've been wanting to get on for a while now, Robert Kiyosaki. First of all, I want to welcome you, Robert Kiyosaki. Welcome to USA Watchdog.
Well, thank you, Greg.
And I want to continue with your intro a little bit. You know, you wrote the self-help book, the number one all-time self-help book, Rich Dad, Poor Dad, which I read, and I stunningly found out that a house was not an asset. It was a liability. More of an asset if it's paid for. And you have the number one self-help financial book ever in history. And I know you're the best of both worlds. You're a macro guy. You're a micro guy. So I want to start talking about what do you see right now? And as a guy that handles money and teaches people about money, what do you see right now in the economy? You must be terrified.
Oh, actually not. I am terrified for my fellow human beings. Detroit just declared bankruptcy. And most Americans have no idea what that means. I mean, the idea that Detroit went bankrupt is like, the canary in the mine, or, when you see your friends dying, you sort of go, maybe I'm dying too, But the average person has no idea what Detroit going bankrupt means. And what it means to me, it means many, many things, but the biggest thing it means is the end of the industrial age. Each age lasts about 500 years. So the industrial age started around 1500, 1492, Columbus sailed the ocean blue. But that gave rise back in the 1700s to America and all this. So America became a power due to the rise of the industrial age. So what's happened in the year 2000 is that we've now evolved into the information age. So unfortunately, this financial crisis is a crisis not of financial problems. We have an educational problem. You see, our school systems are still in the agrarian age and the industrial age. It has not moved on to the information age. So we have an educational crisis, not a financial crisis. The reason I say that is the rich are richer than ever before, but the middle class is shrinking. And the reason, the middle class is shrinking is because both Obama and Romney promised to save them. And when the politicians promise to save your butt, your butt's gone. So I think really that's the problem, is that people are obsolete. People are still running around with obsolete ideas put in their heads by mommy and daddy and the school system. And the school system is about to go obsolete also. It's like J.C. Penney. But anyway, it's a matter of old ideas still running the economy. So if you're in financial trouble, odds are it's because you have old financial ideas in your head, like go to school, get a job, your house is an asset, put your money in a 401k, save money, get out of debt. Those are obsolete old ideas. That's the problem.
So what are you telling people to do in terms of, you're looking at the what do you call it, the landscape here. Jim Rogers says, well, the farmers are going to do well. When I go home to the Midwest, they are doing well. I mean, corn $6 a bushel, or $4, $5 a bushel. Now it's a little low because it's going to have a good crop. Beans are around $11 a bushel. They've been as high as 1920. The farmers are doing pretty well. But of course, one farmer, I got a friend of mine that farms 600 acres. One guy. And that's what we have at harvest time. He hires a couple of people. But so what are you telling people to do?
Well, first of all, Jim Rogers is one of my heroes. And one of the things I say to people is, you've really got to be careful who your teachers are. See, Jim Rogers is one of my teachers. He wrote the book Hot Commodities and all this stuff. He is a great teacher. Now, if you listen to a guy like Warren Buffett, you might be in trouble. Because Buffett teaches a different way of thinking here. I don't agree with Buffett. I agree with Rogers. So,
Warren Buffett would be toast if it wasn't for the massive bailouts. I mean, here, Buffett wanted, this big tax on rich people, and I had a better idea. Let's stop all the bailouts. I mean, if you believe in capitalism, you believe in bankruptcy.
Yeah, I mean, Buffett owns a company called Moody's, right? Yeah. Berkshire Hathaway owns Moody's. So what do? They told everybody that these derivatives were safe.
Yeah.
Buffett should be, I'm sure he's a good man and all this stuff, but his advice was bad advice. It brought down Lehman Brothers, Bear Stearns, all these Goldman Sachs almost went bankrupt, Bank of America, just because a guy like Buffett and Moody's recommended the most toxic of all type of asset classes called derivatives. And today in America, there's over $700 trillion in derivatives set to blow up. And guys like Moody's and Fitch and those guys are still rating them as AAA prime. I mean, that's called dishonesty.
So what do you think? First of all, let's figure out what do you think's coming with the economy? We have this big debt ceiling debate coming up. The Republicans want to dig their heels in over Obamacare. Obamacare, just yesterday, they put off another provision in Obamacare. They're going to let insurance companies charge whatever they want in terms of letting you have out-of-pocket expenses. I mean, it's one disaster after another, sequential disaster. One of my guests, Jim Willey, as a PhD in statistics, says that the failure rate is shrinking. It's happening faster and faster and faster, the failures. And he said, so what are you seeing? Are we going to have a lockdown in credit? Are we going to have a meltdown in the bond market and the stock market? Are we going to have 10 Lehmans all at one time with one of these big banks like Deutsche Bank and Barclays was downgraded in the last 3 weeks? What are you seeing? What's your nightmare?
It's like I started this whole thing is America is Detroit. If you can see it from that perspective, you see the European Union as Detroit. You see China as Detroit. You see, they're not bad people. They're just obsolete thoughts. They're obsolete people with obsolete ideas. So I'll go back to it again. You've really got to be careful who your teachers are. Jim Rogers is one of my teachers. I've taught, I can't call him as a friend. I wish I could. But I respect him. I've read his book, Investment Biker. I've met him at different conferences and all this. He is a great teacher. But you've got to be careful who your teachers are. I don't like school because I didn't respect most of my teachers. It doesn't mean they're bad or good people. I just didn't like going to school and being told to go to school and get a job because I didn't want a job. I wanted to be an entrepreneur. I want to create jobs, not look for a job. So my message is always the same. It hasn't, you've read Rich Dad, Poor Dad and all this stuff. My rich dad was a teacher. Guess what? So was my poor dad. So if you're going to school, you want to look like my dad, my poor dad. Go to school, get a job, save money, get out of debt, invest for the long term in a well-defined portfolio of stocks, bonds, and mutual funds. And your house is an asset. That's poor education. And I'm saying again, this financial crisis is a crisis of education, nothing else. The rich are richer than ever before. But doesn't it seem strange to you that there's more money in the world today than ever before, but poverty is increasing? Doesn't that sound strange to you?
Yes.
It's strange to me. I mean, I'm not any Donald Trump, who's my friend of mine, or Warren Buffett, but I've made more money in the last 6 weeks than I made it all my life because people are begging me to take the money. And yet you have people like the guys working for McDonald's and the fast food guys going on strike for $15 an hour. I feel for those guys. And yet we still say to our kids, go to school so you can get a job. That's an obsolete idea. It's totally obsolete. Detroit is bankrupt on that idea.
Oh, so what do you see? Do you see some sort of a dollar meltdown, a stock meltdown? If the obsolete ideas are there and they're ingrained in America, and America is Detroit, are we going to have a massive reset, a massive default of the bond market, of cities, a massive reset of the dollar and its value? What are you seeing?
I'm saying...
What do you see for the future for the economy?
I'm going to get richer.
What are you investing then? What are you investing in?
It doesn't make any difference which way the economy goes if you have a financial education. You see, if you understand, people are stock guys, which I'm not, they say the bull goes up by the stairs, the bear goes out the window. So that means it takes a long time for the market to go up, but when it crashes, it goes down really fast. So right now, guys like me are sitting on the side waiting for the crash because we're going to get richer. I made more money in 2007, 2008, 2009 when it crashed. My point of view is you're asking me questions that I don't really care about. I don't care if it goes up or down. I do care about the people who will be wiped out. And I cannot save the people who are going to be wiped out as long as they think their house is an asset, go to school to get a job, save money, get out of debt, and invest in a 401k run by guys like Buffett. You've got to be crazy. I will listen to Jim Rogers.
When I was at the networks in 2000, 2002, 2003, your book had come out. It's it's millions and millions of copies, Rich Dad, Poor Dad.
1997 it came out.
Yeah, okay, 97. Well, I was a correspondent in 2000, and you were telling my friends, I didn't know you then, that they said, hey, you know what Robert Kiyosaki said? Buy gold. And gold, people were like, buy gold, but the stock market's going to go back up 2002, 2003. Obviously, you bought gold. And even with the pullback, it's still $1,300 an ounce, gold is. Where do you think gold and things like gold and silver are going?
Well, let me tell you my philosophy. It's not what I think about gold and silver. My philosophy is this. If you trust Obama or the Republicans or the Democrats, then you don't need to buy gold. But I don't trust them. See, not that they're bad people. Here's what I'm saying. They're all doing the best they can. But I don't trust Bernanke. Not that he's not a good man or bad. I don't trust the financial systems. I don't trust our political leaders and all this, but I do trust gold. So it's not in God we trust, in gold I trust. So it's kind of why do I own gold is because I think our politicians, our leaders are functionally incompetent because it goes back to what I'm saying again. They're still operating on industrial age ideas. They're not bad people. Some of them are, but they're not bad people. They're just obsolete.
Do you think that we're going to have one of these opportunities for you to invest in the stock market? You know, I'm coming back at you again on this. Do you think we're going to have one of these opportunities to invest in the stock market? You know, a crash in the next year or so. Some people say it could crash as early as October. I'm hearing rumors, and I don't time markets. I'm not Kramer.
Yeah.
I don't tell people to buy now and sell later. But what I'm hearing from multiple sources, some inside the military, some at a big Wall Street bank, and other traders, friends of mine, they're saying we could happen as early as October, that the system is top-heavy, that the dollar's in trouble, that the QE is coming to the end of its life and effectiveness, that they're talking about tapering. What do you think you're going to get another opportunity to get richer?
Every day. I mean, I've been saying that same stuff, as you may know, since around 1980. And I've been very, people say I'm bearish. I'm not bullish or bearish. You know, I'm both a bull and a bear, which means I'm realistic. So I'm not an optimist or a pessimist. I'm just a realist. All markets go up and all markets come down. I don't care if it's gold, copper, stock markets, bond markets, currency markets. They all go up and down. So to advise your clients to invest for the long term, you've got to be nuts when there's high frequency trading. When these guys are going in, you know, in a minute they might have 55,000 trades, and you're telling your clients to invest for the long term. I mean, if you're listening to that idiot telling you about invest for the long term when people are trading at 50,000 trades per second, you're an idiot. You're a bloody idiot because you're listening to old advice, people who are salespeople, not rich people. Most brokers are called brokers because they're broker than you are. They're not rich people, they're salespeople. Then you have this guy Buffett who claims that, you know, the rich should pay less in taxes. Meanwhile, he's running Moody's. I mean, I listened to that. Then you listen to this, you know, when the shale oil was supposed to run from Canada to Texas, right?
Yeah.
You know, who stopped it was Buffett. The reason he stopped it is because he owns railroads, he owns trucks.
And we saw a giant, what do we see up there? It's more dangerous to take it by rail. You saw a giant oil spill on the tracks. You had a giant spill, and it's much more dangerous. People, all these environmentalists think, oh, it's safer to... No, it's more dangerous. Trucks, rails, every car is a chance for that thing to blow up.
Yeah, so let me go back to...
So back to your... You got to answer me this question. When do you think your next opportunity comes to invest? What are you looking at? Because you're on the sidelines.
Oh, you got to hear what I'm saying. It's always a good time. There's opportunities popping up every split second. Now, if you can't see them, that's a problem. You know, I'm right now, on my last investment, I'm making an 18% tax-free return.
And can you tell me what that is?
Oil. I'm an oil guy. People think I'm a real estate guy. I'm real estate, oil. I started, my first company was Standard Oil as a little kid, you know, 1966, working for them. So I understand oil. So, and the reason I like Jim Rogers is, you know, his book Hot Commodities is about commodities. Oil is a commodity, so is food. So when you look at what people should be investing in right now, again, it goes back, it's not so much the investment thing, it's your philosophy. If you trust Obama, you don't trust that Hillary's going to win or, you know, McCain's going to win. I don't really care who's going to win because they're out of touch. They can't control this economy. So the point here is this, I said again, U.S. is Detroit, who is your teacher? Rogers is my teacher. Buffett is not. So and we all have our self-interest. We all have our own greed points and all this. But I listen to people who I respect and I trust, and, you know, I trust Jim Rogers more than I trust Warren Buffett. If you like Buffett, trade with Buffett. You know, I don't. If you like Susie Orman, I mean, Susie Orman has a very good message out there. If you're an idiot, you should stop spending money. That's her message. You know what I mean? We're all teachers. It depends who your teacher is. I don't recommend listening to Robert Kiyosaki. because I focus on being a rich man, not like my poor dad. So I listen to my rich dad, not my poor dad.
So
You have the same choices.
so you like oil.
No.
You like commodities. You like food.
I'm just saying is you're trying to go to the stuff rather than look for who your teachers are.
Okay.
You should not. Don't invest in commodities if you don't like them. If you don't like the teacher, don't invest in them. You gotta, most people love baseball. I played baseball, but I like football more. So you should play football. You know what I mean? It's really that quite simple. Don't put anything more into it. You shouldn't invest in oil if you don't understand oil. If you don't understand real estate, don't invest in real estate. All I'm saying is, got to choose your teachers first. That's all I'm saying.
So what should the little guy do right now? What would you be telling the little folks? And I have people all the time write me, what should I do to prepare for this coming? I know there's something wrong with the economy. I know things are bad. They're printing money like crazy. It's $85 billion a month in quantitative easing and money printing. How do I protect myself? And you also give micro advice. What would you tell somebody that's saying, that makes this $50,000, $60,000 a year, that doesn't have that much in savings? What should they do to protect themselves for what's coming down the road, or what's already here?
I'm being as macro as I can with you, and you want me to go micro. All I'm saying is this: when Detroit went down, it meant the industrial age is over. It means the information age has begun. It also means our politicians, who the president and prime ministers are industrial age characters. So since I don't trust our industrial age leaders, i.e. Obama or Romney, at that point I invest in gold and silver, because it's not in God I trust, in gold I trust. So it has nothing to do with gold and silver. I just don't trust my politicians. So you've really got to be careful who your teachers are. I go back to it. I like Susie Orman. People think I don't like her. I said, look, when you call up Susie Orman and say, I want to buy a new boat, she says, have you got any more money? She goes, no. She says, well, just deny it. Now, if you need somebody to scold you, then Susie is your girl. You know what I mean? So she's a good teacher if you need to be scolded. If you're a freaking idiot, you need to find a good teacher. I don't know how many times I've got to say that to you. So don't take my advice. I've been in gold and silver since I was a kid. I've been in real estate since I was a kid. Now, the reason I like Jim Rogers is because he and I both agree with each other.
All right, Robert Kiyosaki, you gave us some nice words of wisdom about finding a good teacher. And, of course, you're with the Rich Dad Company. You wrote the Rich Dad, Poor Dad super duper bestseller. Thank you very much for coming on USAWatchdog.com.
And I ask one more thing, is that the most important book I wrote is called Rich Dad's Prophecy. And I predicted in prophecy that the market would come down in 2016. And at the time I wrote that was in 1999 when I was buying gold and silver. When the gold and silver were really cheap. But I wrote the market would come down. It's called Rich Dad's Prophecy. 2016 is the date. Now, when I wrote it, I was kind of BSing people. I was kind of guessing. But unfortunately, here we are in 2013. I think I might be right on the money. So that's the most important thing. I'll tell you when I'm BSing you. And I was BSing when I called 2016. Unfortunately, I might be correct. If I'm correct, I'm going to make even more money, because it doesn't make a difference if markets are going up or down. And that's what I want you listeners to take away with it. It doesn't make any difference. Thank you.
Thank you, Robert Kiyosaki. Thanks for coming on USAWatchdog.com.
Thank you.